So we were supposed to start on our P&L. So we kick off. I still have the target of finishing. I hope I will. The two of them. That thing has really wasted us. So revenue. So revenue, you just add. You add the one for parent. So be ready with the answers. The one for parent is 12 to 40 plus 4,800. But 4,800 you will take for 3 months. It was a subsidiary for 3 months. Then there was no intergroup sale of goods. So we were supposed to subtract sale of goods, which is not there. So give me the consolidated. Someone to give me the answer. So to obey board mass, start with the apportionment. 3/12 times that is when you add. Otherwise, to enter the wrong way. Nancy, you are required to mute. So how much when you add? I'm seeing some reflection, but this is so Vera 13,440. 13,440. We are just adding, there is nothing much. Cost of sales. So COS, cost of sales. Cost of sales, you take for the parent 10,800 plus 4,320 for 3 months. 4,320 is for 3 months. Then examiner said amortization was to be classified in cost of sales. Amortization, I'll get it in which note? Amortization was in which additional information? The 36, where can we get it? Which working? Which working can we get amortization for reference purposes? Working number 2. So check working 2. Thank you. So can you give me the total of this? Well, your time. Somebody is getting how much? 3/12, utakuwa unafanya 2.25 to move very fast. 3/12 is 0.25. So 0.25 times this plus 36. How much? Vera, 11,960 and others. 11,960. You subtract. The difference is gross profit. Gross profit. So how much is the gross profit? How much is the gross profit? 1524. Thank you. And now, before I go to any other thing, there was gain on the recognition, the one we have done here. Which notes? There was gain on the recognition. How much was the gain and which notes? Working 3. So this was working 3. And the gain we got how much? For 456. We got 456. Then associates. S was associate for 9 months. Yes. So you come here and say share of associates profits after tax. Associate must be brought in the consolidation for the period that company was associates. You have to capture it. So check their profit after tax. Their profit after tax was 384. But for 9 months, so 9/12 times 384, and the parent was having 25%. So you share that profit. When I'm coming to check your concern, as the computer, I can check what is the total figure for cost of sales. 11,960. That is 10,800 plus 4,320 for 3 months plus amortization of 36, which is 11,960. Well, I hope that is okay.
It should be 11,916, not 960.
It should be 11. 916.
916. Yes.
But this one is okay.
Yes.
Okay, so I said associates and joint ventures, they normally come here once in the P&L. You share their profit. That is what you bring in the books, which are being given as 72. As 72, we proceed. There is nothing else actually. So you just give me profit before tax. Profit before tax. So give me that profit. Profit before tax will be how much? Honorable members. Profit before tax will be how much? 2052. 2052. Income tax, you add. So income tax will be 431 plus 96 for 3 months. 96 for 3 months. How much? 96 times 0.25 plus 431. What do you get? What do you get? What do you get? What do you get? For 430. Huh? Joy 456. 456. Again, 456. You subtract. So PAT will be how much? Profit after tax. 1596. 1596. Then other comprehensive. There is other comprehensive income. Other comprehensive income. Other comprehensive income, we have gain on revaluation. So gain on revaluation. Gain on revaluation. We have 288. 288 plus 96 for 3 months. 96 for 3 months. How much will that be? Then we get total. Total comprehensive. Total comprehensive income. So 288, and that comes to 15. No, you have not given me a figure. How much? 312. So 312 plus 1596. What do you get? 1908. Thank you. 1908. Here's what it made them. So PAT to NCI holding company. So you start sharing. Sharing, they share the PAT and they share the total. Then again you say total comprehensive. Comprehensive to NCI holding company. Like that. So have the layout. So here the total is 1596. Here the total is 1908. Those two are what we are sharing. People are ready? So what was the PAT share of NCI? It's the last working we did, check working 6. Check working 6. What did we get? Ilikuwa ngapi? In the working six, it was 24. So minority went with the 24. So parent will go with 1596 minus 24. How much? 1596 minus 24. So parent will go with how much? 1572. So parent goes with 1572. Thank you. Let's go to total comprehensive. How did you people get the total comprehensive? You took PAT plus revaluation. The same thing here. You take what someone has gotten in the PAT, which here they got 24, plus revaluation. They will not take revaluation of the parent. They only take the revaluation of the subsidiary, this 96. So they will take 96 for 3 months, but their percentage, they were having 40% minority. So they only take the revaluation in the books of the subsidiary, not the total. You cannot give them for parents. Each way take a wako. What they are sharing is 96. So 96 for 3 months, but minority are entitled to 40%, plus 24, which they got in the PAT. What do you get? What do you get? I'm being given which figure? I'm not now even worried. So we are going to finish before even by 9. 336. So parent will take 1908 minus 336. Minus 336, which I'm going to justify to check. So 1908 minus 336, 336 is 3.6. 3.6. People are getting 1874, 1874.4, which you can confirm. It should be what they got on PAT. PAT they got 1572 plus revaluation. You give them the whole amount of 288. So plus 288 plus 96. 96 is for 3 months, but they'll take 60%. Can you confirm for me if you will get the same answer? Whether you get 1874.4 PAT plus their revaluation plus the one they are sharing. Can you confirm if it is the same? Somebody to confirm? Whereas confirm, yes, yeah, it should be the same. So here we wanted any 5 kids times 2 to get the 10. The workings are never marked. Marks are here. So where are you getting? For the student who interpreted the question properly, will get revenue. By the time unaenda kwa mtihani hata hii cost of sales, mimi sioni kiwashinda, lakini to avoid overstatement, wacha niache. Associate you will be getting by the time unaingia kwa mtihani, utakuwa very thorough. This one also you will have gotten, and this one. Those are the things a student will get without struggling. Provided you have interpreted correctly, here you're supposed to get those 4 ticks, which will earn you 8/10. Not bad. 8/10 without struggling is good. Any question before I go to the statement of financial position? Any question, honorable members? Any question? No question. It seems no question. So let's go to the statement of financial position. So P group, consolidated. consolidated statement of financial position as at 31st December 2022. So shillings are in thousands. Be there. Kunyoosha hii balance sheet pole pole. Alright, so non-current assets, as you can see, we have PP. This time around, there was no revaluation. So, na balance sheet hakuna apportionment, you are in full, provided the subsidiary at the end. So, this is 46,380 plus 91,20. How much do you get? Group is interpretation. Once you interpret that thing perfectly, you are good to go. Hilda, 55,500. Goodwill, I can't recall, but it was working 1. So can you check for me goodwill working 1? Goodwill working 1. How much was it? You have it somewhere there. Hilda, 30, 48, Vera, 720, which is which? Caro, 30, 48. Vera, check yours. 30, 48. Then there is one thing remaining and non-current. Which one is this one? Someone to tell me there is something we need to bring up. Brand, correct. So we need to recognize the intangible asset, which is brand. Okay. So your brand is also which working. Which working, and it was how much? Where could it be this 72 you're talking about? Brand was working number. Where did we get it? Did this working for our own references? It was working 2. Working 2, 720. Huh? Working 2, 720. So working 2, 720, but there was amortization of 36. So subtract 36. 720 minus 36 is likely to be how much? 6 something. 684. Add. When you add, people are saying 59 to 32. Current assets, they have just said current assets, all of them. So current assets is 15 to 40 plus 2640. How much? $17,880. Thank you. Total assets will be how much? 60 what? No, me, I don't want to think. 77,112. 77,112. Equity and liabilities. equity and liabilities. Nani anakuanga mtu wa ordinary share capital? Hiyo tunaachia nani, ndio siku ya mtihani utakuwa nakumbuka nayo, hiyo inakuanga ya so and so. Hiyo inakuanga answer ya nani? Ya kila mtu. Free tick. So ordinary share capital, parent only. Imagine tumefanya hiyo kitu kila siku parent, alafu mtu anasema siku ya mtihani, wewe walimu, imagine kidogo tu nipate ordinary. Haina maneno mingi. Parents. So parent, where are you? 12 to 40. Then we had revenue reserve. Revenue reserve, I'm just complying with the name they are giving it. This is the retained earnings. Our retained earnings was working number. So tell me the working number and the figure. In fact, give me these two to avoid wasting a lot of time. Na sit down and controlling interest. So give me the flow. So Mercy working 4. So this is working 4. 49,010. 010.4. Then the other one is working 5. Working 5 at 5601.6. Add if you are okay with the figures. You're okay with the figures? 66,852. 66,852. Then we have liabilities. You are liabilities is 8940 plus 1320. Tell me what you are getting when you add those two. Okay. Current liabilities. So these are current liabilities. But they have lumped pamoja. So the current liabilities total, those two. Najua kuna watu wameshoka sana because kuna watu walitoka wakaenda kanisa, wakaenda bouncing castle, wakapita chama na wamefika kwa class. So I know people are tired. 10 to 60. 10 to 60. Therefore, equity na balance kweli. Total equity and liabilities. How much are you reporting? Balancing, whereas so that is 77,112. Correct. Even this one is 5 at 2. As if you 10, this is 1, 2, 3, 4, 5, 6, 7, 8. So any 5 at 2. So where are we getting the 5? For the person who interpreted this correctly, you'll get 1, 2, 3, 4. It's not good to lie to people. Those are the ticks you will get there without struggling. So that is 8. If even I don't want you to struggle, that is 8. The other side also we have gotten 8. Kwani ukipata 16 over 20 in group, what else do you want? Now imagine, those ones are marked. You will get them without zile matoganzanio hapo ati sijui retained earnings, NCI, I don't know, gain on disposal, those gain on the recognition, those stuff. Time wastage. Internet ilienda, we came back at 31 past 8. And we have done the 2 of them. And remember here we are discussing. So in exam where you are discussing with your heart alone, you can take, imagine you can do this group, you can do it with maximum 18 minutes. That P&L and this one, and you get 16 over 20. Na kwa hiyo swali ingine. Neighbor anaona una smile anafikiria umelemewa. Kumbe wewe ndio number 1 Kenya mzima. All right, so 10 is up, but try for me our next chapter. I'm happy because tumegonga target. Mwende? Yes, that is how it should be. That's how it should be. So write for me there. Na imagine mtihani itakuwa tu hivi. Remember, these are the last 2 consecutive sittings. Not even last. We have done the three last consecutive. Last sitting was August. This is April, and December also we did. So we have done the 3 last consecutive. You know, if you are able to solve the current, it means you are reasoning with the examiner in the current setting. So the questions will just be resembling what we are doing. There will be nothing different. So write for me there. IFRS 5. Non-current assets. Held for sale. Held for sale. And discontinued. Discontinued operations. And discontinued operations. And discontinued operations. Now, this one here, I have to be very open to you, is one of the areas that may pair 90% chances of being examined in this setting. It is the sister of step acquisition, the direct opposite. Allow me to give you overview before time. We have 4 minutes. 4 minutes, I can give you a small overview in the 4 minutes. So, one, this is what personally I'm giving it 90% chances of being examined this sitting. And it goes this way. Initially, we were having 60%. Along the way, we sell 35. 35 disposed of. You sell your shareholdings in the company. So that at the end of the year, you are remaining with 25. So you see the opposite. Ile ingine ilikuwa 25, then you top up to be a subsidiary. So here is a subsidiary, you sell to bring it to associates. So how will we go through the P&L? So it is the opposite of what we have done. So in this case, you account for it as a subsidiary proportionately up to the date of disposal. Then you ignore that other part. Unlike that other one, we were ignoring this part, then we consolidate for this one here. So for disposal, you apportion it in the pre-disposal period. Pre-disposal, while for step, you account for it in the post-step acquisition. So this one is going to be the opposite. So there's nothing very big. Actually, hakuna kitu kubwa sana. There is a slim difference. And the customer are likely to bring this one here. In the 3 minutes, I can read the notes. You don't speak kidogo, in 2 minutes. Then next to Kipatana is swali straight. So go to page 7. Go to page 7 of the handout. Page 7, yeah. Page 7 of the handouts. It's not something very big. Page 7 of the handout. Page 7 of the handout. Non-current assets held for sale and discontinued operations. IFRS 5 outlines how to account for non-current assets held for sale or held for distribution to the owners. Any asset held for sale should not be depreciated. So when you classify asset as held for sale, you're not supposed to depreciate that particular asset. Ile unaona kwa nje imeandikwa car for sale. That one in the books, if it's a company, it is classified as held for disposal. However, for an current asset to be considered as held for sale, it should meet the following criteria. So that was asked in November 2020. We are not going to check it now, but it was saying, in the context of IFRS number 5, discuss the conditions which must be present in order to classify an current asset as being held for sale. So for you to classify an asset in the books as being held for sale, one, the management must be committed to a plan to sell the assets. Lazima mshike hizi, inaulizwa the conditions to satisfy for you to classify an asset as being held for sale. So the management must be committed to sell the assets. Number two, the asset must be available for immediate sale. Sio tunaandika ati held for sale, lakini mtu akitaka kununua share, unajua, unajua, the asset must be readily available for sale. Three, an active program to locate a buyer must have been initiated. The sale must be highly probable within 12 months after the asset had been classified as held for sale. So the sale should be within 12 months. So kampuni si kila siku ati asset held for sale. Because once you say it is held for sale, we disclose it. We don't bring it in the books. You know, there is disclosure and recognition. So we don't recognize it in the balance sheet. We give it as a disclosure to the books. You know, disclosure is just telling the users of financial statement that this and that and that. So you are not allowed by the standard to classify asset as held for sale for a period more than 12 months. Kama ni hivyo, then revert it back, irudi. So the sale must be within 12 months. Then 5, actions required to complete the plan indicate that it is unlikely that the plan will significantly change. It means we don't expect that we will revert that now it is not being held for sale. It means you wanted maybe to mislead some people with your own motives. So the plan, there must be indication that the plan will not change. And the last one, the assets must be stated at fair value or at a reasonable price. Can you tell me, like the first 3, I'll sample the last 3, which number have you mastered? Because nataka mshike, lazima ushike sahi before we revise. Which points have you mastered without, hata ukiamshwa 3 AM to give us the conditions, utasema this, that, and that. Mercy and Vera, 1 and 2. Kwani 1 and 2 ndio rahisi sana? The management is committed to plan to sell the asset. The asset must be available for immediate sale. Which other one is an easy point to master? Hawa kila mtu ako na yake. Either the fourth one is within 12 months. Usome hizo zingine, because in that sitting they wanted 6. When I say number 6 is easy, the asset must be fine. NB, any asset that has been classified as held for sale should be presented separately on the face of the statement of financial position. Unaitoa. The asset held for sale is classified as a continuing operation until it becomes discontinued. You know, discontinued means sasa umeuza. But if it is held for sale, it is continuing operation, but until now you dispose it off. When you dispose, now we call it discontinued operation. Therefore, the profit from discontinuing and continuing operations should be recognized in the income statement. But discontinued, you check their profit up to the date of discontinuation. You prorate, then you bring in the books. So we are not going to discontinued operations. I want to deal first of all with assets held for sale. Here wajakuwa very keen to examine. They just brought a small question in November 2020. So write for me there. That is the next question to answer. November 2020, question 3. November 2020, question 3. 3B. Question 3B. November 2020, question 3B. So when they are held for sale, how do we bring in the books? Take it nicely. Here haina maneno mingi. What will take our time is the discontinued operations. So we'll do that question, then is when we transit to the discontinued, then to back in a foreign subsidiaries. I appreciate your time. At least, hata mimi unanipea moral. When the turn up is good, it means people are committed. So I can't let you down. Have a good night. Na kesho tuamkie kazi, tujenge taifa. Thank you. Allow me to end the class. so that I can record. I can compress to forward. Good night.